2 weeks ago, I bought my brand new Mercedes AMG. All from my trading profits and all because of the simple strategy that I'm about to share with you now. But look, I'm not sharing that with you in any way to brag. I just want to show you what's possible when you refuse to quit, regardless of how hard things seem to be right now. Because you know what? It wasn't easy. I've been trading for 13 years now, and the first 3 years of my trading career were brutal. I went through endless ups and downs, not only on my account but also mentally and emotionally. I've seen nothing but losses for 3 straight years in a row. And honestly, for the longest time, I felt like the dumbest trader alive. Spending my entire weekends and holidays staring at the chart, studying price action, just to walk away with nothing but losses. Even my ex told me I'm wasting my time and I should quit. Now, luckily, I didn't listen, and luckily, he's my ex. But you know, there was something good about these hard times. Those painful years made me strip everything to the basics until I finally discovered the one strategy that clicked. It was actually the exact opposite of what everyone else teaches. And honestly, this is why this strategy means so much to me. It pulled me out of a losing cycle and finally gave me a taste of consistency and profits. This is the exact framework that helps me get into trades before everyone else. And it also allows me to catch big reversals before the pattern actually develops. It is built around how the market traps retail traders and smart money steps in to reverse it. And the best part, you don't need years of experience to use it. It's straightforward and very easy to follow. Now let's get into the details of the unsharp strategy. And as always, I'm going to share with you a few live trades that I took live in our trading community. So step number 1 is identifying the sucker move. But what exactly is the sucker move? The sucker move is an emotional move that sucks traders in and traps them on the wrong side. Think of like stop loss hunting. Let's take a look at the charts. As we can see on this chart, we have lower lows, lower highs, everything looks pretty bearish. So if you're about to open a trade, you would probably think this is a short and you would be positioned on the short side. But let's see what happens next. The market trapped everyone in on the short side just to reverse and continue further higher. Let's take a look now at another example. This chart right here looks extremely bullish. Higher highs, higher lows, and we see here a very nice flag formation. And most traders would think that this is going to continue further higher and would open a long position. But here is what would happen next. Boom! The market reverses straight to the downside. So if you put your stop loss here or even here, you would be already stopped out and again trapped on the wrong side. A typical example of a sucker move. Let's take a look at one more example. As we can see on this example, this chart looks extremely bearish. Lower lows, lower highs. But let me replay and show you what happens actually next. Boom! The market trapped new traders and sucked them in here to open a short position, making you think that this is extremely bearish, and just to grab your stops, grab liquidity and reversed straight in the other direction. So now our job as traders is to find out where these reversals and traps happen and to trade them in the right direction, to trade them with smart money and be positioned on the right side. We're no longer going to be chasing breakouts and breakdowns. We're going to be looking for these trap situations and execute in the right direction, which leads me to step number 2. Finding key levels and reversal zones. Because all these traps don't just happen random in the middle of the chart. Most of them happen around key pivotal reversal points. So how do we find these zones? So when you open up the chart, you want to figure out first where is the previous high and low. As we can see, this is the previous high and this right here is the previous low. Now we're going to box in these zones just like that. And the rules are extremely simple. We want to be buying at the lower part of the box and we want to be selling at the upper part of the box. We do not chase flags or breakouts in the middle of the box. But while we focus on the highs and lows, the lows represent the biggest and most committed buyers. This is like a line in the sand, and buyers are ready to protect this zone, step in and place buy orders. Also, these are liquidity zones for smart money, because this is where most retail traders are putting their stop losses. And this is what smart money uses to execute their orders. This is why most of the time you're getting trapped on the wrong side, because institutional money needs your orders to be able to execute large positions. On the other hand, the highs represent the biggest amount of sellers, the most committed sellers. This is where smart money is locking in profits from long trades and defending this resistance zone. So let's replay now and see exactly what happens. As we can see, the price goes straight to the lower part, to this low right here that we marked. And as we can see, this is a pretty emotional move. Huge, big red candle. Again, just enough to make you think that the market is going to continue lower. But here's what happens next. See how the market grabbed liquidity and just went slightly below this low and immediately reversed to the upside, going straight into the upper part of our box end range. This is the power of key premium zones. And by the way, you can use that on any time frame: 5-minute chart, 1-hour chart, 4-hour chart, daily chart, it does not matter. Just remember one thing: the higher the time frame, the more accurate the setup and the more premium the zones. Let's take a look at one more example. Once we open up the chart, we're looking at the previous high and the previous low. And again, we want to box in these zones just like that. And remember our rule: we want to buy at the lower part of the box and sell at the upper part of the box. So now I'm going to replay just to see what happens around these zones. As we can see, the market was heading towards the upper part of our box and then immediately reversed off this zone. Obviously, there were enough sellers to push the price lower, and then went straight into the lower part of the box. So again, if we followed our rule to buy at the lower part of this liquidity zone, we would be in a pretty good shape, because this zone was defended a few times and eventually the market reversed straight to the upside. But how do we know that it's actually time to pull the trigger? And how do we know that we're not catching the falling knife? Because let's face it, sometimes the market will break out of these zones and will just continue further higher or lower. That's where step 3 comes in: looking for a very specific candlestick formation. I call it the pitchfork. So what exactly is the pitchfork candlestick formation? If we're looking for a long, the sucker move represents typically 3 to 5 red candlesticks in a row straight into a reversal zone. So what we want to see next is one green candlestick. As soon as we have one green candlestick, our entry happens on the second candlestick. The second green candle must go above the high of our first green candle. This is going to be our entry, and the stop loss can be placed slightly below. On the flip side, if we're looking for a short setup, the sucker move would represent normally 3 to 5 green candlesticks in a row straight into a resistance key reversal zone. And then in this case, we would be looking for one red candlestick first. And as soon as the price starts going below the low of that red candlestick, this is going to be our entry. So now let's go ahead and see some live examples that I took live in our trading community on different time frames and different assets. So that right here is the NASDAQ NQ futures and the 1 hour chart. And the reason I want to start with that trade is because I'm already in this trade. I just opened it today and I'm still in it live. So I just want to walk you through the overall process and how I plan to manage that trade. So as soon as I woke up and I was on my computer, on the screens, I was looking at the chart and I connected this high and the low. And as we discussed, the first thing we want to do is look for the sucker move. And if I zoom out on this chart, you see that this area was a previous high as well. So this zone was tested already and actually we broke slightly above. So we see the exact sucker move in real time. A lot of green candles, small breakout right here as we can see, just enough to suck people in on the wrong side, on the long side. But again, if you zoom out and you connect the highs and the lows, you see that we're at the top of the range. And again, this was right here a previous resistance zone. Therefore, I was expecting more sellers to start stepping in around this zone. And remember what we discussed, we want to sell at the upper part of our box and buy at the lower part of the box. And because we went straight up, I was looking for a short entry. So in our example, we had our criteria filled. We have the top of the range, top of the box. We have our sucker move, a bunch of green candles in a row. We have a failed breakout. And my entry happened right here below this candlestick. So I was waiting for one red candlestick first, which happened as we can see right here. This was our John Wick candlestick with a wick on the top, indicating that there are more sellers stepping in and rejecting this resistance zone and high of our box. And so as soon as the next candlestick started taking the lows right here, this was my entry. And my mental stop loss was placed just above this candlestick right here. So this is a typical example for the sucker move, and this is not a replay trade like I said because I'm right now in it. And the way I managed that, as soon as we started dropping below this low, I went ahead and closed some of my position. And right now I just want to observe the current price action, and I would use these candlesticks here to trail down my stop. So how does that work? As the price progresses, I will observe how these candlesticks close. And if I zoom out, you see this was here a breakout zone, which represents also, by the way, the middle of my box. This is my target. So I want to see if I can get more out of this trade. And if we come all the way down to this zone, I'm just going to close the trade. But if the market decides to continue further higher and reverses, I'm going to trail my stop, meaning if this candlestick right now closes like that, I'm going to move my stop loss right here and observe how the price action continues afterward. And if it reverses, it's going to take me out and I'm going to close this trade for this beautiful profit right here. So that's the current plan. This is the overall execution. Again, we have the upper part of our box, we have the sucker move, which is a few green candlesticks straight into the resistance zone, straight into the upper part of our box. We have one big red candlestick and it has a wick on the top, indicating more sellers stepped in, and the entry happened right below. Now let's go ahead and check another example, another time frame, a trade that I took on Friday. I'm going to replay that one. So this right here is the S&P 500, the ES futures, and the 5-minute chart. And I am going to walk you through the exact trade that I took live in our trading community 2 days ago on Friday. And I'm going to show you how I exactly managed that trade. So the first thing I did as soon as I opened the charts was to box in the previous highs and lows, just like that. And my plan was to long around this area because, again, this is the lower part of the box, which represents the biggest amount of buyers. Also, if you zoom out, we see that this zone was tested a few times. So sellers were trying to take control. and had the attempt of taking control a few times, but obviously buyers stepped in and protected this zone and pushed the price higher. As we can see, this was a low here that was bought up, and we see here a few more times this low was bought up again, and then again this similar zone right here a little higher was bought up again. So this indicates for me that there are more buyers stepping in, therefore I was looking to long around this area. Now I'm going to replay and show you how that exactly looked like. So initially the price broke out. I was not chasing here at the top of our box. I was patiently waiting to see if we're going to get a pullback straight into the lower part of our box. And this is exactly what happened. We went straight from the upper part of our box towards the lower part of the box, exact the area that was tested before. And if you were fast enough, you could have actually also shorted this upper part of the box again. But my plan initially was to look for longs because we had a very nice support zone and liquidity area here. So remember, the second rule is to watch for first green candlestick. And so we had our first green candlestick, we tested the lows, therefore I went ahead and longed right at the top of this candlestick. My stop loss was placed slightly below here just to leave it some more room, and take profit was placed around these highs. Now I'm going to replay again so that we see what happened next. So initially the price started going against me, and at the beginning I was a little worried if this is going to break the zone, but again this was a pretty solid zone that was tested multiple times, so I just decided to stick to my rules and keep my position open. As soon as we started breaking out of this zone here, I was in profit, and because it was Friday, I just decided to go ahead and close half of my position. Eventually, we continued further higher, and I started seeing a little bit of a rejection here. We were at the upper part of our box, and so I just decided to go ahead and close even more of my position. Again, it was Friday, and I just didn't want to leave way too much size over the weekend. So I closed some more. Because I was already in profit, I just decided to trail my stop and just let the position go over the weekend and see if I can get some more out of it and, close the remainder on Monday. So right after I came to my computer on Monday morning, I saw that I'm really nice in profit, and then I closed everything that I had and I was done for the day and done with that trade. So sometimes I start these positions on the 5-minute chart, but if I see that there is more potential and I booked some profits, I leave some open and just want to take a little bigger swing out of them, let them go for a little longer. So that right here is the Nasdaq, the NQ futures, and the 1-hour chart. And most of the time I prefer to stick with the 1-hour chart because the setups are so much more accurate and the charts look so much cleaner. So now I'm going to walk you through the trade that I took live in our trading community. So as we can see, this looks here very much like a sucker move. We see a few green candles straight in a row to the upside, and we see a tight consolidation. And as a completely newbie, 12 years ago, I would totally long that. I would buy the high and then just not understand what happens as soon as the market reverses. But remember what we said, we're boxing the highs and the lows. And so now we don't want to be buying at the top. Instead, we want to be looking for a short right here, and we want to be looking for longs here. This is our rules. I was also looking at the 25,000 area, which is a whole number and acts as a psychological number and resistance zone. We can also observe that the price was trying to break out a few times, building that base. It had one attempt to break out right here. It didn't happen, dropped. And again, all that is indicating that there are more sellers stepping in and potentially more sellers would step in. But how do I know that this is going to happen and the market won't continue further higher? So for that, I just want to see one red candlestick first. And most importantly, I wanted to see that we're breaking the lows right here. So now I'm going to replay and show you how the entry looked like and how the overall trade management looked like. So as soon as the price started taking these lows, I opened my short trade and I was looking at the low of the box as a potential target area and take profit area. My stop loss was right above here, and I'm going to pull that stop loss right there so that I show you how that exactly looks like. This is the high, and again, the 25,000 whole number, psychological number. So if I'm wrong, I'm going to be stopped out, and then I will look for another entry. Now I'm going to replay and show you how I exactly managed that trade. So initially the price went slightly sideways, it didn't quite go straight in my direction, but eventually it broke this zone right here and flushed straight towards the lower part of the box. And if I zoom out again, this right here is an important area because this was a previous breakout area acting as an important liquidity zone. Therefore, I went ahead and closed most of my position around this area. And then I only had a few contracts left and I was observing how the price is going to react around this zone, which is the low of our box and the previous support. For that, I'm going to replay and show you what exactly happened. So as soon as the price started going above this zone right here and I started seeing this first green candlestick, I decided to go ahead and close my trades for a profit because chances were that we're going to bounce off this zone and I just didn't want to risk to give back more of my profits again. So I hope that trade explained a little bit how to look at these zones in terms of buyers, sellers, and the sucker move. And I hope you enjoyed this video. Let me know if you have any questions in the comments below. And by the way, if you have not subscribed for our weekly gains guide, we're sending each week our in-depth analysis of the futures, the most important liquidity zones, and growth stocks. Feel free to do so. The link is right in the description below. Thank you so much for watching, and I cannot wait to see you back here on our channel again. Bye for now.